it's not only for the people who are above certain age, but for everyone. And that's where I realized what in childhood I used to hear stories from my grandmother about Ramayana, Mahabharata, and one episode which clicked me is about time in Mahabharata where Yudhishthir was king of Indraprastha, and he was also a great Danveer apart from Dharmaraj, like Karna. So one day, a beggar came to his court and he was asking for some grants in terms of wealth. And Yudhishthir told him to come the next day. And Bhim suddenly started clapping and banging the drums. So everybody started to ask him that, what is it? Why are you doing this? So Bhim claimed loudly that my brother has become a Trikaldarshi, that he can see the future. He knows that he is going to be alive tomorrow. That's why he sent the beggar back. So while this incident is from a mythology, it helps us to introspect and understand that why it is important for us to have a succession in plan. Succession is basically whatever is left to us, which is the part of our success to the next generation. Because we all are working hard so that the next generation can get benefit out of our hard work. Because આપણે ગુજરાતીમાં કહીએ ને કે ખીચડી કોઈને ખૂટતી નથી, especially for the people who are here and who are part of Equity's clientele. We all are also having savings and investments, and that's why we are part of Equity Group. So there is enough and more with everybody, but all we want is to preserve it and grow. That's why succession becomes very important. Because if we leave behind legacy with issues, which we see in a lot of other families, then the next generation also gets the downside along with the upside. So every person will try that we make the process as smooth as possible, and succession has to be truly transitional in terms of that after the person, the next generation gets everything in a proper manner and in a structured manner rather than they have to go from pillar to post to get what is rightfully theirs. So today we will highlight certain aspects that how can we do succession planning in a structured and smooth manner. So there are two main documents or structures by which the property can be transferred from one generation to the next generation. First one is the will, second one is the trust. Of course, there are many other ways also, but these are the two primary ways. So we will focus on these two. So as I told,
Sorry to
basis
cut
of,
you.
yeah,
Can you just be a bit louder?
yes,
There's
sure,
feedback,
sure.
so that
Okay,
yeah.
correct. So the goal of succession planning is to protect your wealth and legacy, ensure smooth transfer of assets from the first generation to the next generation, and reduce family disputes in the next generation so as to have a crystallized documentation that which asset will go to who, how it will go, and what would be the timings. And presently, right now, there is no inheritance tax. But earlier, there was inheritance tax in India. And there is a likelihood that it may come in future, not in immediate future, but in long term, because in a lot of Western countries, they have inheritance tax. So in order to avoid that also, it is very important to have a structured discussion and a structured plan in place so as to next generation should not be burdened with tax just to get the assets which is rightfully theirs. So now if we say what is a will? So will is nothing but in layman terms, if we say it is a gift after the death. So whatever you give to your relatives or near and dear ones or any outsider during your lifetime is a gift. But what you leave for them after your death is a will. In legal terms, it's a legal declaration of how assets would be distributed. So it's a sort of an affidavit. If we talk in the legal terminology, it's an affidavit which is documented and for the structured asset to be distributed after the death. And there is a notion that will be only after the death. But then there are concepts of having a live will, because there is a possibility that a person may be brain dead. So in such scenario, who will take care about the medical expenses, or if there is a person who becomes an unsound mind. So nowadays there are these new concept of even live will, wherein in a will we document that in the event if the person becomes of an unsound mind, or if there is any physical challenge, or if he's a brain dead, then what needs to be done. Presently, euthanasia is not allowed in India. But what if it is allowed in future? Whether you would want to do that or you would not want to do that. So there are so many things, and there is no specific format in which the will needs to be drafted. That is why it is known as will. Like whatever you have in your mind, whatever is there is a will. So will is a typical synonymous that it's your will, that like how you want to do it will happen. So even if you write a will on a plain tissue paper, it is valid. So people will have a notion that will needs to be on a stamp paper, it needs to be registered. So it's not required actually. Even if you write it on a tissue paper, that is good enough, or even on a plain paper. But what is essentially important is that when a person is making a will, he needs to be of a sound mind, and the will should not be a coerced will or by force. It has to be a free will. And whatever assets we are giving to the beneficiaries have to be clearly identified. And whatever assets we are giving, that assets also have to be clearly identified. And right now, here in the slide, we have mentioned about signature and witnesses. Because if we document the will, then it is important that the person who is writing the will has to sign on it, and there needs to be two witnesses. But if you go in the literal sense, even oral wills are valid. It is just that from a procedural aspects, it is difficult to prove that the person had actually communicated, and that is where the disputes happen. Because in India, even oral contracts are valid as per the Indian Contracts Act. But to prove it in India, in Indian courts, is another ball game altogether. It may take years, and that's why the testamentary department is like having a backlog of about 8 to 10 years. And generally, will take about 2 years to get the probate. So it is very important to document these things. But even if these are not documented, there are ways in which the assets can be transferred. Coming to the next topic here, I am covering only the basics, and then as we move forward, we will go in detail. Now, while will was a good structure, but what happens is that as we grow in terms of our asset size, in terms of our businesses, in terms of our investments, in terms of the family, then there are a lot of complexities that come, which will may or may not be able to cover. Because if there is a family business, or if there is a HUF, and there are complex structures or complex working arrangement in an HUF or in a family business from one or more entities, or if there are interlinked assets which cannot be described in a plain vanilla manner, because the person who has created that complexities knows the background, but the next generation or the beneficiaries may not know. So in that arrangement, it is ideal that if we are able to create an SPV, so trust is nothing but a special purpose vehicle registered under the Indian Trust Act, which is a legal arrangement to hold and manage the assets for identified beneficiaries, or beneficiaries to be identified in future. And trust can be created during the lifetime or even through a will. So even a hybrid structure is possible, that in the will you can write that after me, a trust will be incorporated and these assets will be transferred to a trust. Or you can create a trust during the lifetime, transfer the property in the trust, and prepare the items in which the trust will monitor through its trustees and how the functioning will happen. So the hybrid structure and a bespoke arrangement is possible. There is no fixed format or procedure in which we need to either function a trust or a will. But trust has multiple types, which is a revocable trust and an irrevocable trust. So in revocable trust, whatever assets you transfer in a private trust are revocable, which because you are transferring for a particular purpose, particular period, or a particular reason. Upon that reason happening, you can take it back. But what happens is then in part of succession planning, it defeats the purpose. Theoretically, revocable trusts are good, but practically it is not advisable for the purpose of succession planning because trusts are also created for the purpose of other than trust planning. For example, if a trust is created for a particular event, so in that event, if that event doesn't happen, you can revoke the trust. So private trust works beyond succession planning. So that's why it is important to understand where we have to use revocable and where we have to use irrevocable. In irrevocable trust, once you transfer the assets to the trust, then you cannot take it back because you, as a sponsor of the trust, have transferred it, and whosoever is the beneficiary is then the owner. So it's essentially a gift only, but to the beneficiary, but you can control the gift through trustees and through the arrangement of the trust deed. The second concept is discretionary trust. So, so in trust, you can identify, suppose if a person or if a couple has two kids. Right now, they don't want to decide that whether they want to give equally to both or they want to give in a particular ratio. So, in that case, they can keep it discretionary. They can identify the beneficiaries, but the ratio can be decided at a later stage or at a later event. So, that is up to the discretion of the sponsor who has created the trust. And if we identify what will be the ratio, what will be the amount, then it's no more discretionary, it's a certain ratio. So it becomes a certain trust. The third one is the charitable trust. A lot of times there is a confusion that when we say that a trust needs to be created, people have a notion that a trust is for charitable purpose only. So charitable trust are different trust, even though they are part of Indian Trust Act, they are incorporated under the Indian Trust Act. But once they register it with the charitable commissioner under Section 12AA and under Income Tax Act under 80G, that's where it gets a flavor of charitable trust. Till that time, it is a private trust. So the objective of the trust decides whether it's a charitable trust or it's a private trust. As a part of succession planning, a lot of people also incorporate charitable trust because they would want to give a small or a large part of their wealth after their death in charity. So, in that case, they may also create a charitable trust as a part of their succession planning. And ideally, the most people that they would do is a family trust, in which there is a private trust which is created for the family. And in that, people don't have to get hassle of getting a probate in the will and go to the court because you don't need to do anything. During your lifetime, the assets have already been transferred. So after the person is deceased, then there is no other procedure that needs to be done because assets are already transferred during the lifetime. Also, HUF. HUF is also, in a way, a trust only because a lot of time family businesses have an HUF and HUF has identified the way it functions. HUF, like a trust, can also have its HUF deed. Most of the times we prepare a single pager HUF deed in which we mention who are kartas, who are co-partners. But we never mention roles, responsibilities, how an HUF will act. So many times people who already have an HUF will also modify the HUF deed and incorporate that after the karta is deceased, who will be the next karta and how will the functioning happen. So that is also something that people can explore. And why should we create a trust or when should we create a trust? Because people will always feel that trusts are for HNIs, ultra HNIs. It's a complex thing. It's a regulatory requirement. We will have to do a income tax return filing. We'll have to do accounts. We'll have to do audit. Yes, all of those things are required, but it is important for those people who are having complex businesses or assets which may have certain complexities, or if the beneficiaries are, say, not living in India. So if we have to do a probate and beneficiary is not in India, then we may have to do an apostille if, say, a father wants to will a property to the son. But then son will have to come to the court or appoint a nominee, go to the Indian embassy. Suppose if the son is living in the US, then the probate procedure, it's a 2 year process and there is a lot of hassle that is required. So in such cases, it is important that if the trust is created, in that case, the transfer of assets becomes very smooth. And it is also important from a tax perspective. A lot of times what happens is that if the beneficiaries is living in certain jurisdictions outside India, and they may have to declare their assets in India. So what happens is people are reluctant to do that because when the property comes through a will and the person is living in, say, United States, and there they will have to declare the assets which are outside United States. So they will have to declare assets which are in India and they may have to pay tax in US, which they would not want to do it. So as a part of overall structuring, they may transfer the assets to the trust. So what happens? The assets of the trust are not reflected in the assets of the beneficiary because beneficiary is the beneficiary, but it will have a separate PAN card. So most people who are living abroad or having beneficiaries who are abroad will prefer a trust structure over a will structure. Also, when we have to do probate, if a person has assets in more than one country, for example, a person has assets in UK, India, and UAE, then they will have to do for assets which are in India, they will have to do probate in India. But for assets which are in UK, they may have to do a separate probate in UK. So then all these multiple complexities come into play. When such scenarios are there, then it is better to have a trust in place so that we don't have to go through that hassle of getting property transferred and also with the fear of having inheritance tax in future in long term. Also, sometimes when a person wants to get exposed to debt, a lot of businesses may are also not having a favorable debt equity ratio. So in that cases also nowadays, as we know that if we are taking a bank loan, bankers will want the borrowers to give a personal guarantee. So when a person gives a personal guarantee, then all the assets in their books are indirectly lien to bank and they may need an NOC from bank to transfer those assets. So sometimes if you are buying an asset and the asset itself is adequate enough to cover the risk, then people will transfer the additional assets to the trust so that it is not covered under the personal guarantee. And those things will be transferred prior to taking the bank loan. So then it's not a concept that we have taken the money out while taking the loan, that asset was not in the books of accounts. So then bank will never go after those assets. For example, right now we all are aware about the junior Ambani, that even though he is declared insolvent, but he still has a yacht, he still has a 26-story building, he will still come in Rolls Royce. And the lifestyle is not affected, even though the business is affected, even though he's declared insolvent. But his personal lifestyle is not being affected because the assets were transferred to the trust prior to taking those loans. So banks cannot go after those assets. So Vijay Mallya, for example, has to run away from the country because the assets were transferred after taking the loan, which becomes a fraud. But if you transfer the assets prior to taking the loan, bank cannot go after those assets because those assets essentially do not belong to borrowers. It is belonging to the trust. So it is very important that if the business is sensitive and has such complexities that in future liability may arise, in that case, it is very important to have a trust in place. And sometimes it also happens that some of us may have children with special requirements or special care, or some family members who may need special care, wherein till the time the parents are alive, they may be in a position to take care of their dependents. But sometimes, say, if somebody has two kids, one kid is slightly slower and may not be able to deal with the society independently. So, in that case, if parents feel that the entire burden can come on the other kid, in that case, if we have a trust in place to take care about the financial requirements of the kid who is slightly weaker or physically challenged, in that case, at least financially, his needs are being taken care of, and the other trustees or the other legal heirs are not burdened to take care about the financial responsibility. So with special care, there are special provisions which can take care, and the person can pass on the legacy to the next generation peacefully. Now, a lot of us would have questions that whether probate is mandatory or not. So probate, as a India level, it is mandatory only in few states. Originally, those states which were presidency states, like for example, Mumbai, Chennai, Kolkata. So say Maharashtra, Tamil Nadu, and West Bengal, it is mandatory. But for if you say other states, then probate is not mandatory. It's an optional thing for most part of the country. But it is important to get the probate done because it gives a legal validation, because otherwise anybody can question. Historically, India had a culture of having multiple spouses, having kids from different spouses. So there were a lot of quarrels in the family. So from that perspective also, if the will is there, if it's probated, it is always validated and the title gets cleared. Otherwise, title is always a challenge, because once the probate is done, then nobody can challenge the title, and the valuation is also fair, because without probate, if we are willing to transfer the asset, the buyer firstly will not be comfortable, and if he gets comfortable, then he will look to bargain. So even for those states where it is not mandatory, it is good to have, but it is not a must have. Now coming to the topic of nominee versus beneficiary. So a lot of times we feel that if we have done nomination, there is no requirement to have a will. So we need to understand that under the Indian Succession Act, for transfer of immovable properties, it is important that either we have a will, and if we don't have a will, it goes by the concept of legal heir. And legal heir is determined by your religion. So if you are a Hindu, then it will go by the Hindu Succession Act. And if you are of some other religion, it will go by that religion. So sometimes we write name of nominee, but nominee is essentially a trustee. So till the time we are not identifying who is the legal heir or who is the beneficiary, either through a will or through a letter of administration through the courts. So if you are not able to get that, till that time the nominee will have the right to control and monitor the property. Nominee does not have a right to sell the property. So most of us will have kept a nominee in the society if we are living in a society, in the society. While it is very good to have a nominee, because if the person is deceased, then at least nominee will have a right to vote, right to monitor the property. Until the time the probate is done or the letter of administration is done, nominee can take care of the property as a trustee for the beneficiary. But nominee is not the legal owner, and nominees do not have the right to sell. But as far as the movable assets are concerned, because the succession law or the testamentary is a complex procedure driven thing. So for movable items, government has relaxed that, for example, if there are banks, shares, insurance, so wherever there is a nominee, the bankers or the demat holders are allowed to transfer the shares or the money. So in that case, the money directly is transferred to the nominee's account upon request. However, nominee as a trustee of the money is required to transfer the same thing to the beneficiary. So it is just that कि बैंक में किसी का nomination में नाम है, that person doesn't naturally become the owner. Even though the funds will be transferred to his account, but he doesn't become the legal owner. As a trustee, it is his responsibility that the funds needs to be transferred to the legal owner. Sometimes if we have more than one child, or we keep a nominee of the spouse. So after husband, say the nominee is wife, then the money goes to the wife's account. Then wife will feel that okay, I am the nominee, so all the money is mine. But if there are kids and if there is no will, the kids can claim that money, that even though you were nominee, we are also the legal heirs and we want our share from that, and legally they can. So while it is important to write the name of the nominees in all the movable assets that we have, that is for ease of procedure, that at least we have control of our assets, but ultimately it will go to the legal heirs or the beneficiary. Most of the times, it is ideal to keep the beneficiary or the legal heir only as the nominee. So if you have identified who will be the beneficiary of that particular asset, then it makes sense to make that person only as the nominee so as to reduce the hassle. So the third concept is the concept of gift. So after the Raymond incident, wherein the junior Singhania removed the senior Singhania out of control from all the businesses and even the house, in most of the senior citizens group, there is a lot of fear and a lot of discussion happening that we should not transfer all the properties to the kids because what if they remove us out of the house and then we are left with nothing? Because the properties were gifted to the kids during the lifetime so as to avoid the issues of probate at a later thing. So while the parents will always do the best for their kids, sometimes things can go wrong. So, government has come up with a provision which is supported by the Maintenance and Welfare of Parents Act 2007, which has included a concept of revocable gift. Originally, gifts were never having a concept of revocable because gift once given, it is transferred. But only in the case wherein the gift is given from a parent to the child, in that case, you can have a concept of a revocable gift, which will say that while during the lifetime for natural, out of natural love and affection and for ease of transfer and as a part of a succession planning or a family arrangement, the gift has been granted. But if the kid doesn't take care of the parent, then the parent has a right to take the property back. So sometimes as a part of family settlement, the parents will transfer the property to the son. But if there are say more than one son, he will transfer if parents has say one 3 BHK, one 2 BHK, and it is decided as a part of family arrangement that say father will live with the kid who has a 3 BHK and mother is say deceased long back. So now father is alone, he can't live alone, and there are two kids, one has 2 BHK, one has 3 BHK. So father is giving a 2 BHK gift to the son who is not going to live with him, and a 3 BHK to the son who is going to live with him. Essentially, it was father's flat, but because of certain family discussion, it was decided to transfer it to the son's name. Now, father is living in the house, and since the larger house is given to him, it was his responsibility to take care of the father and his medical requirements. And if the son doesn't take care of those requirements, then father has a right to take back the property on his name. So essentially, it is to protect the seniors in the family who have done a lot for the next generation and even transferred the property. And if the next generation do not respect that, then by way of legal clauses, now the parents can take back the property. While we will not advise to transfer all the assets to the kids, at least a parent should have some assets with them till their last breath. But even if some assets are transferred, it can still be revoked. So sometimes we feel that okay, we are not Ambanis or Tatas. Why should we have a will? We know we have only one son or one daughter. Whatever we have will go to him or her. So why to have a will? Because if we have a will, then we will have to do a probate. If we live in Bombay, then it is important to get the probate done. It's a 2 year process. Plus also there is a cost involved. So better not to have a will. But in that case, people don't know the fact is that if you don't have a will, it's known as intestate succession. So in the case of intestate succession, uh, we will have to do a letter of administration. So letter of administration is a process under law wherein the legal heirs will need to have a validation from the court that they are the only legal heirs. Because who are the legal heirs without will, how will we identify? Because while it may sound strange, but there is a possibility that people may have a second wife or a kid from a wife who is not known to the first family. So there are a lot of incidences which have happened in the past, because of which it's a mandatory requirement, at least in Maharashtra, West Bengal, and Tamil Nadu, that if you don't have a will, then you need to have a letter of administration. And letter of administration again is through a testamentary department so in Bombay, it is through Bombay High Court. If you are living in a smaller district, or if you are a blue collared employee working in a factory, then you can also get it through the local district officer or the collector's office. They give a legal heirship certificate, or they identify a legal heirship certificate based on the names which are there on the ration card. But that is only for non-metro districts, and only for those people who are blue-collared employees, part of a larger factory or part of union. So in that case, there is a relaxation for them. But for the crowd and for this audience, we will have to go through the court process. So if I talk about when we don't have a will and once we have a legal heirship certificate, it doesn't stop there. After identifying that, okay, we are the legal heirs, then the assets are distributed as per so if we are Hindu, then it will go as per the Hindu Succession Act. Now, under Hindu Succession Act also, there are multiple class of heirs. For example, when we talk about the class 1 heirs. So in the class 1 heirs, it is the widow, the children, and the mother. So for example, if a person has died at age of 60, now he has a wife, he has a son, he has a daughter, he has a mother, he has a father, he has a brother, he has a sister. So what notion we have is that if that person is deceased, then the property will go to his wife and children. But that is not the case. The property will also go to his mother. For example, his mother is of 80 years. So the property will be divided among four of them: wife, son, daughter, and mother. Now we will say, okay, it's going to mother, no problem, but it doesn't end there. If something happens to mother, then 25% of mother's shares will go to class 1 heirs of mother, which is also mother's children, which is the person who has died, his brother, his sister. And then it goes to them, and that's like you cannot take it back unless there is a family arrangement and you take it back. So sometimes we feel, okay, it's going to mother, there is no problem. But after mother, it goes to mother's legal heir. And if mother has a will, then it will go as per the will. So it is very important to understand the nuances that can be caused if we don't have a will. And if we don't have class 1 heirs, then it will go to class 2 heirs. Now, class 2 heirs will have a specific order. Like, for example, it will first go to the male side of the family, that his husband's brother, and all of those things. Then it goes to the paternal side. If they don't have the male lineage, then it will go on the female lineage side. And every religion will have a different way of transferring funds. For example, under the Muslim law, it also goes to the brother's side of the family. A part of it will go to parents, a part of it will go to the brother's side of the family also. So it is very important to have a will in place. Now, when there is a requirement of letter of administration, so as we discussed earlier, if the person dies intestate, which is without a will, then we need to have a letter of administration. But that is not the only case. Even if we have created a will, but if we have not identified an executor, then also a will without an executor cannot be enforced. So we will still have to get a letter of administration from the court and thereafter do a probate of the will. Or sometimes if we have identified an executor, but that executor has died before the person is deceased, or if that executor is unwilling, because if the we have made a relative an executor, but then the family relations are not good and the executor is unwilling to cooperate, in that case the beneficiaries will have to still go to the court, do a letter of administration, appoint a court administrator, and then do the process. That is why it is advisable that we need to have multiple executors and not only one. Once, and in the case of letter of administration, once an administrator is appointed, that administrator, like a trustee, will ensure that all the debts are paid off, all the assets are collected and then distributed to the legal heirs as per their legal heirship certificate or their class of legal heirs. And it typically takes about 1.5, 2 years. So minimum time is about 6 months, and in Bombay it goes up to 1.5, 2 years. So basically, what I've here done is tried to cover at least the gist of the will, the letter of administration, then any detailed questions, maybe I would be in a better position to answer based on specific questions.
Great. Thanks, Asit. Very detailed and touched upon a lot of aspects. We can have questions where we can unmute if you want to just go and
Sure.
ask it verbally, or else you can put it in the comment section and I can ask Hasid. And meanwhile, since we collate the questions and think about them, if we have any for Hasid, I'll touch upon a very important concept called as Married Women's Property Act. Since we are talking about protection, succession, this is a very, very important but an unknown concept that a lot of us may not be aware of. It was an act actually by the British in 1874. Uh, it came into force on 12th of February 1874. In 1923, it got amended and insurance policies became a part of it. Now, basically, in a layman term, what is a Married Women's Property Act? It is nothing but uh, protection of the assets of the wife and the kids from the person, basically the man in the house who is handling the business. And if ever anything awry happens from a perspective of debt, and if things go south, then the policies that are taken under this may not be attached to recover the dues. So it was just from a perspective that not all of the estate of the person doing a business or who has a liability or even in a service sector gets attached and the family gets affected over a period of time. So it was to protect the interests of the women and the kids. Um, there are certain advantages and certain disadvantages, which I will quickly run in the next 5 minutes. And post that, we will post the webinar in the coming week. We will send a separate note to all of you to even have a look at it because it's a very interesting thing. The biggest advantage is um, it acts as your trust. And why I say that is, and since we are talking about trust, once you take an insurance policy and you put it under the Married Women's Property Act, saying that I have a term insurance of say 2 crores, and if you put it under the Married Women's Property Act or get it registered under that, at that point in time, none of the assets, if ever of the person whom is insured goes bankrupt, they will be attached, right? And it happens at a zero cost. It is just one form which you have to sign, and ultimately that gets registered under the Married Women's Property Act. So it comes at absolutely zero cost. Nothing is even charged to the policy holder, and the kids and the wife get to be the nominees. So the second advantage is where it acts as a trust is once that money, if ever gets realized in a term insurance upon the death of the policy holder, that money cannot be used or forced to pay off the debt of the person on whom the policy was taken for. So it acts as a trust where the beneficiaries, in this case, which is also a slight disadvantage, can only be the wife and the kids, but not mother and siblings, right? The third advantage over here is that You can take a term insurance also under this. You can take a endowment policy also under this. You can take a money back plan also under this and put it under the Married Women's Property Act of 1874. The disadvantage is in case of a trust, and Hasid can correct me if I'm wrong, you can make some changes and there can be amendments. But in case of the beneficiaries of the people under the Married Women's Property Act, there can be no changes. If for once I have said that, okay, my wife needs to get 50%, my son needs to get 50%, in my entire life, I cannot change that. मैं उसे बदल नहीं सकता. Even if I get divorced, even if I don't want to give it to my son who's gone on the wrong track, for example, मैं उसको बदल नहीं पाऊंगा. Invariably, the money upon my death, if in case of a term insurance, for example, will flow 50% to my wife and 50% to my kid. The second part is you cannot put an existing policy under the Married Women's Property Act. It only has to be a fresh policy. So if I need to put a policy today, I will have to take a fresh policy and then sign the document and then it will go under the Married Women Property Act. It is irrespective. The third, again, one of the advantages is not a disadvantage, but one of the advantages, irrespective of the caste, creed, religion, this policy is very much applicable. One of the last disadvantages, at times it can be misused and there can be notoriety. Somebody who just wants to take some debt and then purposely default and then try to take some money off can misuse it big time, because this money will not be used and no financial institution will be able to claim from the beneficiaries who have been put under this policy. So it can be at times at the risk of misusing this important concept that is there. Lastly, one cannot take a loan against that. This is not an advantage or disadvantage, just a note. You cannot take a loan against this policy if you put under the Married Women Properties Act, Married Women's Property Act, right? So quickly wanted to touch upon it. As I mentioned, we will have a separate note coming your way and you can have a look at it. And in case of any questions, you can definitely reach out to us offline as well. Quickly, Asit, there are a few questions that have come on the chat.
Karanshu, just to add, so while you
Yeah.
give a note and share about MWPA, you
Hmm.
can also link it to the PPF. Like our example, if you have a PPF account,
Right.
that any financial institution or debt recovery agent cannot take,
Touch.
or if there is a Stridhan up to
Right.
certain grams of gold. So
Right.
MWPA falls under that class. So while
Right.
you give a note, maybe you can relate that as well and share.
Definitely.
Yes,
Definitely we will. So all these becomes like pseudo trusts,
right,
form of things where people, as you mentioned that most of the times people want to have these things, or not most of the time, many of the times they want to have it for conservation of their assets. So
right.
this also helps. We will definitely put it.
Yes.
Right. So, so few questions I have, and there are actually a lot many from my side as well. So we'll
Sure.
quickly run through that.
Sure.
The first one is, after how much net worth should one go for a trust? So, and this I'll just add upon and when I talked at the start, there are a lot of myths that yeah, trust के लिए 300 करोड़ 200 करोड़ चाहिए 100 करोड़ चाहिए. Where obviously to some of the clients whom we have spoken to and we try to help them understand that ऐसा कुछ नहीं है. There is no particular requirement of net worth, but uh, just if you can really touch upon this, that at what point of life cycle of or wealth cycle is a will important and required, and a trust, if you can take both of these together.
So will essentially is to do more with the planning of how things will happen for an individual life. But if one has a business, then there are a lot of more complexities associated with the business. For example, if one has only one house and most of the assets are movable assets, Then, and also it depends on the family structure. For example, if you have a nuclear family, if your kids are living in the same house or in the same country, there is no problem to do the will probated. Or if you are living in, say, Madhya Pradesh, where there is no requirement to do the will probate, then might as well don't do a will, have a second name in place. Or if required, you can also add a third name. For example, what we generally advise client is, for example, if you're buying a property, husband is owning 50%, wife is owning 50%, and you have one son or one daughter. You can add that son's name with a 0% beneficiary interest. So the name will already be added in the property so that he will still have the voting rights. But when the assets is sold, he gets 0%. But his name is there in the registered document so as to give comfort. So if you have one or two properties, there is a nuclear family, the kids are here, there is no problem, then it makes sense to just keep a simple will. But if you have multiple properties, if you have kids who are going to live in abroad, or because sometimes we don't know where will our kids be in future. So, and when we have more properties, then when we transfer a property to the trust, immovable property, in that case, there is a stamp duty implication. So, any transfer to the trust will have a stamp duty on it, as if it's a normal transfer. There is no income tax, but there is a stamp duty. For example, in Bombay right now, there is a 5% stamp duty and 1% metro cess. So, if you transfer your house to a trust, then you will have to pay 6% stamp duty. So if you have a couple of assets, there is no need to create a trust. But if you are intending to buy an asset, which is an additional asset, in that case, you incorporate the trust first. And when you transfer the money to the trust and then purchase the asset, then there is no stamp duty because, anyways, you are going to pay stamp duty to purchase and the trust is purchasing. So, transferring cash or money through bank in the trust does not have stamp duty implication. It just has a 2 or 3% stamp duty on the initial corpus. So, if you create a trust with, say, 1 lakh rupees, a corpus, and you then pay 3,000 rupees stamp duty. After that, if you even transfer 10 crore rupees in the trust, there is no stamp duty. And then you can buy assets. So if you are having a big family or even if two kids and you want to have separate assets for each kid right from day one, then you can have trust in place or you create two trusts for each kid, transfer the property in the trust or purchase it in the trust, and the kid is already created as a trustee. So ideally, when you have more than two or three properties, if you are not a nuclear family or if you have more than one children, in that case, it makes sense to have a trust. So there is no monetary limit. And also, it's a myth that there is a lot of regulatory and compliance cost. It is like an HUF, you will have to file your income tax return and all, but that's a minuscule cost in the overall scheme of things. So while I will not be able to say कि भाई आप 1 करोड़ के ऊपर रहेगा तो ट्रस्ट करो या 5 के ऊपर करो, but ideally when you have more than two or three properties and when you have more than one children, then it is ideal to have a trust in place.
Got it.
Also, if you have, say, a girl and a boy, while just is my personal opinion, people can have different opinions. Sometimes, when the girls are unmarried, the parents are slightly skeptical. Should I transfer the property to the trust? What if the husband side of the family is not good? Ultimately, I want to give the property to my daughter. But what if whether his husband will have a say, whether his in-laws will have a right on that? What if they get divorced? Whether my daughter may get alimony or not because she already has a property on her name, and all those complexities may come up. So in such cases, people will say, okay, I want to give it to my daughter. I give it into a trust, but I then create a discretionary trust. So I don't say that how much my daughter will be owning. So I will put 1,000 rupee in the trust and I will put a flat in the trust. I will say all the assets of the trust are discretionary. So my daughter is definitely a beneficiary. But whether she will own 5% of the property, 100% of the property, or 0% of the property, I can also say that bank balance of 1,000 rupees will go to daughter and the flat will go to my son or wife. But after marriage, if things are good and if we feel okay, this is the right time, then we will say, okay, 100% of the assets will go to the trust or we put it in the will. So the
Hmm.
discretion thing, while creating the trust, we don't put it in the trust. And in the will, we'll confidentially mention that, okay, I have created a trust, property is in the trust, and I want to say that 100% of that beneficiary or the entire flat is going to my daughter. So we don't need to do probate of that will. because it is not containing any immovable property. It is just saying the ratio of the trust. And daughter gets the asset hassle free. So under such situations or scenarios, then it's ideal to have a trust.
So it's
Or
nothing
also
to
in a
do with
large
the net
family.
worth. It is to do with the complexity or how,
Correct.
yeah, easing you want.
Correct. Correct.
Because two,
Generally, what happens is that if the net worth is high,
right.
then they are having more exposure to
Oh,
what is happening in the society. They know that, okay, the social circles are big. They know the complexities that their circle of friends are having. And
hmm.
they are also having right advisors. So if your net worth is good enough, for example, if somebody is part of equity, then they are always in touch with you. And if they will have legal advisors and other people surrounded with them, advisors to guide them what is right, what is happening in the market. So they will be the first who will take an informed decision. Those people will not have right advisors, may not be taking an informed decision. That's why they don't do all these things.
Okay. And it does not cost a lot to make a trust and will,
No, no,
right?
not at all.
If you can just touch upon that as an extension, and then I'll go to the second question.
So generally, it should be in thousands and not in lakhs.
Okay, great. Really helpful. Second question is, uh, and I mean, if you can just extend this to family arrangement as well, because it points to that. How about an amicable settlement between heirs if executor is non-cooperative and original will is with executor?
So, firstly, original will is with an executor, and if he's not cooperating, then it becomes questionable thing that how do we prove in the court that we have a will?
Okay,
Because if we don't have access to the will, if we have a Xerox copy or a scanned copy, that is good enough. Then we can go to the court. We can say executor is not cooperating. We do a letter of administration. Court will send a bailiff to the executor, and court will order the executor to present the will. So we can procure the original will through court if we have a copy of it. But if we don't have a copy of it,
okay,
in that case, it becomes challenging. Then the legal heirs maybe will have to go to the court and say, look, we don't have will. Let us do a letter of administration. And based on the legal heirship, you transfer the property to all the beneficiaries in equal. And thereafter, we do a family arrangement. So family arrangement is a concept wherein all the members of the family, in order to avoid disputes, enter into a legal arrangement, which is sacrosanct and blessed by Supreme Court's order, wherein there is no tax, no stamp duty, no registration requirement. That document on a plain paper is good enough to transfer the assets among the family members. Of course, there are some procedural challenges that if immovable properties are there, then the registrars may not be comfortable in registering. So we may have to take a court's order to get it enforced. But there are enough Supreme Court judgments to support that argument that family arrangement is a sacrosanct valid document. Generally, as a part of family arrangement, we do a release deed and get it registered, which is slightly how we call it in Indian language, a jugad kind of a thing, because registrars would want a registered document. So if there are, say, multiple legal heirs, and internally they have amicably settled which property is going to whom, and there is no legal will that how, like how you told, it's with the executor or it's not there, but we know the contents of the will. So say X property is going to the elder son. So the other family members will register a release deed, which is costing only 1,000 rupees stamp duty and 5,000 rupees registration cost. You register a release deed that, okay, we all are legal heirs. And for this particular property, other legal heirs are releasing their rights in favor of son. And that property is registered on the son's name by way of a release deed. And we give a reference of family arrangement. So by
okay.
that, it is a legally valid way to transfer a thing. So it's in a way structured transaction. So by this way, properties can be transferred through family arrangement with release deeds.
So does the family arrangement have to be registered or it can be unregistered? And does it have witnesses just like a will have?
No. Mm. So family arrangement is generally a family meeting. So we call it a memorandum of meeting. It's an MOM. So it's not a document. It's a oral agreement entered between the family. And we document that because we will need something to prove that these things had happened. So we document that thing as a memorandum of minutes, and all the family members will agree to that, sign to that. There will be witnesses to that. And generally, we do it on a 100 rupee stamp paper to give it slightly mental comfort. So while it's not required to be done on a green paper and on a stamp paper, but that's generally be done to give that authentic look that if anybody is seeing it's a green paper with stamp paper, then people feel okay, it's a legal paper. But legally, all these things are not required.
Okay. One more question is coming on the registration part as a continuation. What is the difference between registered will and unregistered will?
So ideally, wills are not mandatorily required to be registered, but will can be challenged on basically two grounds. One is the person's signature is not matching, and generally, when a person is of old age, and generally people create a will when they grow old. So at that time, the signature may not match with the signature which has been given to bank or other areas. And the second way of challenging a will is that if another will is created after that particular will. So will can generally be challenged on these two grounds. So if the will is registered will, so in that case, nobody can question the signature because it's a registered will. So then the only thing which can be challenged is that there is another will after that. So if anybody is challenging, then it will be their responsibility to prove that there is another will, and they will have to produce that will and show that, okay, this will was signed after that. And they
Hmm.
will have to show that signatures are matching in the other will. The person who
Hmm.
has a registered will not have to prove anything because it's a registered will. And generally, when people want to keep things discreet, they
Hmm.
choose to have a unregistered will,
Okay.
because when you register a will, the assets become public. Sometimes parents may not want to tell children what they want to give it to them during their lifetime, so
Right.
they will not register it. They will do a unregistered will. And in order to avoid the signature challenge, what we do in practice is when the person comes to us, we will say that you come to our office, we will do a video recording. So we video record the will, and the person will also read out the will. We also take a doctor's certificate to say that the person is of sound mind.
Okay.
Doctor becomes the witness. So if somebody is challenging ke will signatures are not matching, then we
Right.
can say, okay, this was on a live video
Hmm.
recording and we have a video recording of it. So court will have a good enough evidence to say that signatures is theirs only.
Wow. So, I mean, this again really helps add a perspective. Last few questions I have in the interest of
Sure,
time. I'll quickly take, you have time, right? 10
sure.
minutes.
Yeah, yeah.
So, one other question was, is there a tax efficiency angle to having a trust, or it's majorly succession planning?
Tax efficiency may come because trust is right now taxed at a maximum marginal rate, which is as good as a LLP or a partnership firm, which is 30%.
Right.
So if a trust has an interest income,
Mm-hmm.
so for example, above 5 crores, you pay higher tax, you pay extra cess. So if you are already in the topmost bracket, then you are paying all those slabs. So your individual limit goes beyond, and you also pay that 10% cess. But if
Right.
your assets are distributed, if you have
Okay.
your own assets at the highest slab, and if trust has its own assets, it will be at the maximum marginal rate, which is 30%, and not the 38% or 40% slab. So there
Okay.
is a small benefit and
Arbitrage.
tax efficiency. Yeah, arbitrage is there.
Okay. Also, in terms of what are certain aspects which we need to always incorporate in a will and a trust? Like, there are any basic points which we should not miss. Also, how long does it typically take? Because when, as a layman, if you ask me, to form a company is a tedious process, signing out documents. So, is will and opening or creating a trust and having a will as tedious?
No, so generally a will should not take more than a day's time. If the person has a clarity in the mind, most of the times what happens is when people come to us, they don't have that clarity
Okay,
because they will say, okay, the bigger assets are identified, but the
right,
smaller assets are not identified.
right,
So when they speak with us, they understand, okay, this. So nowadays people also mention where what will they do with their Instagram account, what will they do with the Facebook account and the
Okay.
email IDs, because now phone password is also, people don't share their phone password with their spouses. So what will happen to that if you have a 2 lakh rupees phone and it can't be opened without the password? There are a lot of such things, right? So you will need to keep your locker password and all. So then
Right.
we give them, because when we discuss about all these things, they are like, okay, this is important, because if the person dies, then the spouse may not be knowing that who are the friends. So if you want to even send a funeral message, you may
Right.
not have numbers of, and on that day, you are not going to go to, say, a phone repairing vendor and say, okay, open my iPhone. That may not happen on that day of the death.
Right.
So then you may not be able to send messages to all the near and dear ones. So
Right.
all these steps, procedures are generally mentioned in the will,
Right.
but the person will be skeptical that, okay, I don't want my spouse to open my phone. I want my friend to open my phone, delete it first and then give it to spouse. A lot of things can happen. So generally people find ways, and we give them ideas based on our past experiences, that we sometimes, for example, put all the passwords in a Excel file, which is password protected. And that file's password is given in a chit
Okay.
to a beneficiary. So the one beneficiary will have the password of the Excel file and another beneficiary will have the Excel file. The person who has
Okay.
the password does not have the Excel file, and that's on a shared document. So you can always update your passwords.
Right.
For example, I have done it for myself. So when I created my will, so I keep my passwords on an Excel file. That Excel file is with my father,
Okay.
but my father does not have password of that file. My wife has that password in the locker, but she does
Okay.
not have access to that file. Now I know that my wife is not going to ask my father
Right.
share the Excel file and vice versa. But if I am not there, if I'm traveling and some unforeseen incidents happen, then in
Right.
my will it is written that this particular shared document file is sent to my father and the password is in my locker. The key is with my wife. So
Right. Okay.
so all these things. So when somebody comes, they are like, okay, now I have this also. I have a locker also. How do I
Hmm.
do? So in that case, there is a food of thought, and then
Hmm.
people may take time to think how they want to do.
Right.
Sometimes people also think reading of a will is a celebration, because in, say, in Gujarati, when my dadi passed away, so she has seen four generations. She was 89 years old. So she died in a very happy note, and she had prepared everything, like how everything needs to be done. Even the photo which was coming on the funeral, she had prepared, kept it ready. And she is like that if the will has been read out, now she has five kids, and those five kids are married, and their kids have two kids, and their kids have one, two, two kids. So it's a big family. And she's like, I want to give everything to somebody so that nobody feels that I did not remember them. So she will give one bangle to all the grandkids and one gold coin to all the kids, some amount to charity, some amount to the temple where she used to go, saris to all her friends. And also, while the reading of will itself becomes like a celebratory event and everybody gets something, even though smaller amount. Sometimes the son-in-laws will feel that, okay, we are not being thought about. So something for them, watches for them. And when you have lot of things, so for one of the clients, they had a rare collection of plants. So then she is like that, I want to give plants to my this particular relative because he's only the one who can take care of my plants.
Oh.
So the plant will go to which person was also mentioned in the will, which sari will go to whom, and
Okay.
all of those things. So it all depends on person to person. You can do it in 2 hours, you can do it in 20.
And the same things can be put in a trust also.
Same things can be put it
And
in
I can
trust,
say the
but for personal
beneficiary of.
assets, we would prefer to not put it in a trust, only the major assets to be put in a trust, because in trust, there are trustees. You will have to file your tax return and all. You would not want to know that you have a Kishore Kumar collection and you are, why you would want to share it with the trustees? You would want to share it with your family. So these things will go in the will. Ideally, there is no fixed concept. You can put it in a trust also if the value is high. But if the value is not high, you put these things in a will, and
Hmm.
trust you put the items which are of a high importance and high valued items.
So last couple of things. One, you mentioned about will and a trust, and certain things can be put in a will, certain things can be put in a trust. So can I have a will and a trust both? And
Yes.
how can that arrangement work if you can throw
So
some,
only assets which are transferred to the trust will be governed under the trust, and you would not want to put all your assets in the trust.
right?
So at least your one house should be outside trust, the primary house,
Okay.
and other investments can go in the trust because you will want to need those assets. For example, the trust has beneficiaries and wife and kids, and you need money in the business. Then you cannot sell the assets of the trust and take it back. So only those extra assets which are there for the family silver, will go in the trust.
So, trust can be a part of the will, but a will
Yes.
cannot be a part of the trust.
No.
Okay, so will and then I
Will,
can.
correct.
Okay,
Correct.
okay, got it. One important last two questions, sorry, actually one just popped up on the screen as well. But one important thing is, can I keep on can I keep amending my trust deed
Yes.
as and
It's
when?
it's like an LLP or a partnership deed. You can amend as many times as you want.
Okay,
And
okay.
you don't need to submit your trust deed anywhere. It's with you only. So as many amendments you want, you can do it. You can revise it multiple times.
Until I'm alive, I can be the beneficiary, and I can say post I'm dead, my
Yes.
kids or my wife can be, or whoever I want.
Yes. Yes.
So
Yes.
that's the advantage of the trust over the will.
Right.
Understood. I think the last question which came up, uh, we can do probate or succession registration when alive. Can we do that?
No. Because generally will come into effect only after that. Then during the lifetime, what you do is becomes a gift.
Okay, understood.
You can register a gift deed and transfer if
Interrupt.
required.
Okay, understood.
Sorry to interrupt you. My voice is coming.
Yeah, yeah, Manthan bhai, please go ahead.
Sorry to interrupt you.
No,
One
no,
question
please.
is there. Okay, nowadays we are saying that
Yes, Manthan.
I have property. Okay, I have done the will.
Hmm.
Okay, after that, what? Okay, suppose my legal hair is there. Now we either they have to do the probate or succession certificate. Okay, but just after my mother will, I come to know that it's a very tedious things
Correct.
to do. Means probate is taking 2 years time, and we know
Correct.
that new generation doesn't have that much time. So there is any way कि I have done the will and I can declare that this is my legal heir after my death. So they don't have to run here and there.
Unfortunately, no, sir, because will as a concept can be changed multiple times. So, for example, if the person says that this is my will and this is my nominee, what if the person changes their will after a certain time? And this has happened in the past. So, as of now, the law doesn't allow this. So, you will have to do that process.
Okay, okay. So there is no other way कि we can the just burden come to my legal heir after my will.
No, sir, that trust is a way out. So, that is
Okay,
an option, but not much flexibility there.
okay. Thank you, sir.
Sorry, Asil, one last question and then we close for sure.
Yes.
Uh, the question is, what is a conditional gift deed?
So conditional gift, like how I discussed, that if a parent is giving a gift to the children with a condition that you will take care of me, you will take care of my medical expenses. So if that is the case, then you can give a conditional gift. But that is only from parents to children and not otherwise.
Interesting. I think thanks so much for a lot of clarity. There were very important concepts that you covered in terms of wills, trust, when is it applicable, letter of administration, in estate, um, plus, I mean, I for a fact didn't know about the revocable gift deed part which has come, which is very interesting. Until now, we always thought gift is a gift and it's given, it cannot be clawed back. So a lot of enlightening points. Also in terms of family arrangement and then the different tools that can be used. I'm pretty certain that the kind of wealth India is going to create and what it has created, more and more such things will be implemented by the investing diaspora to protect the assets. And that's a natural phenomena that once you have something, you would always want to protect it from a psychological point of view.
Right.
And thank you so much for your time. on a Saturday morning and a bit of afternoon as well. It was really enlightening. I hope and the team members that have joined from Equity, plus the clients who have spared their valuable time on a Saturday, when there's a holiday, have gained valuable insights. And I would just, as a request, if there is any food for thought and further conversation, then I will bring them to your guidance for
Sure.
the right kind of guidance that they can have on any kind of structure. But
Sure.
once again, thank you so much, Hasid.
Thank you so much, Karanshu, and thank you so much, everyone, for patiently listening. And if there is any query, like how Karanshu told, I'll be happy to help. So you can write to Karanshu, or maybe if required, we can meet and solve any queries if at all there are any.
Yes, great. Thank you so much, everyone, once again for joining. A lot of gratitude for our first webinar. We hope to do this, or not hope, we want to do this every quarter, and we will. Or along the way, maybe even do it monthly after a while. But for now, see you in the month of October with some other different concept on the personal finance side, which can help you protect, preserve, create your wealth. Thank you once again. See you next time. Have an amazing weekend. Bye bye.
Thank you.